Good morning, Shireen. As I said, we have to pull our eyes away from the great show in the United States and focus again on those numbers that are coming out this week here. First of all, the reserves, they've just come out. What's your reading of them?
Well, David, we did see that the reserves number for October slipped slightly from 50.9 billion to 50.7 billion. This was largely expected on the back of the fact that we did see some depreciation of the currency during the month, and this could possibly have kept the SARB on the sidelines. Initially, we had anticipated that with the inclusion of South African government bonds in the WIGB at the beginning of October, that there would be significant inflows into the market from foreigners. Prior to that inclusion, however, we saw a downgrade by Moody's and S&P, and given that we saw some two-way traffic and the fact that the SARB could possibly have really stayed away from purchasing foreign exchange reserves on the back of that depreciation, we also saw that we still have very high sterilization costs, and that's also keeping the SARB on the side. There was also some significant downward pressure from gold reserves during the month. We saw the gold price significantly lower by 3.1% during the month, which really dragged down that number on the month. There was also a drag on the net reserves position, and that could possibly have been on the back of a redemption of government loans during the month. So in total, the currency depreciation and valuation adjustments really affecting the reserves in a downward direction.
Okay, and then we've got the mining and manufacturing data coming out, and of course that's pointed to GDP. Particular interest given what's been happening in the mining sector. So what are we expecting there? And then, given what we're expecting, what effect is it going to have on policy?
Well, David, we are expecting the September numbers coming out for the mining production as well as manufacturing production tomorrow. We are expecting a decline on both those fronts. We're expecting a 7% decline in the mining production as well as a 3% decline in manufacturing production. And this is going to add very negative sentiment to what's going to happen at the end of the month with regards to GDP numbers. We are expecting that both the mining and manufacturing sectors could possibly subtract from GDP growth. And we're currently sitting at growth of about 1.7%. Given very modest declines in both the mining and manufacturing sectors. However, if tomorrow's numbers surprise on the downside, we could see further downward pressure on the GDP numbers, and we could possibly see a sub 1.7% growth rate.